I always get out on the daily chart and I'm looking at swing lows, swing highs. Oh, sorry, I pressed spacebar. Okay, back to the top-down analysis. I'm looking at swing lows, swing highs, or FVGs. Okay, so in the beginning of the week, I told you I was bullish because price swept out the swing lows. Therefore, I was targeting the swing highs. Phenomenal job for anybody that was able to take advantage of that information. We got the bullish move. The target was completed. Very good job on that bias. There goes your results, right? So the logic that I'm providing here on stream in front of everybody, you're now getting a result to it. When I'm sitting here saying I'm bullish when we're below swing lows, look at these results, right? It was a beautiful move higher, and now we've hit the target. So very good bias for this week. But now we have to keep analyzing so that we continue to understand how to move forward. Okay? The information that I am now currently looking at to understand a bias, is this right here. We are now dealing with a swing high, okay? A location for a bearish bias. Now, to understand when it's time to become bearish is understanding the presence of displacement or a clear and decisive change in the state of delivery. Okay, let's go over those two scenarios. So you have two scenarios here. If we create a bullish imbalance, right, a bullish FVG, if we create a bullish FVG at this location, then that looks like continuation higher. Okay, so trend continuation looks like a bullish FVG. This is what we're analyzing. Do we displace through this swing high? Displacement literally means the presence of an FVG. If we displace through this swing high, then I'm looking for continued higher prices. Okay? A reversal would not show displacement. Okay? If we were to be bearish, then we would have a big upside down candle, right? It would have a huge seller's wick. We'd have a big upside down candle, and the body would close within the range. This is what a reversal looks like. This is what continuation looks like. So if we're creating a bullish FVG at the swing high, I'm looking for continuation higher. If we create a reversal at the swing high, that's the moment in time that I'm willing to become bearish. Let's break that down a little bit further so that we can have an even further understanding. Let's leave the swing high on here. That way we know when to start looking for that if-then statement, if we displace to the swing high or if we get a change in the state of delivery. And then let's go to our market structure time frame. We're now on the hourly chart. And what I just stated was, if we get a change in the state of delivery, right? So a change in the state of delivery, whatever you want to call it. Again, I really don't care about the terminology, but a change in the state of delivery is a change in trend, right? So if we're looking at the trend, we're making higher lows, higher high, higher lows, higher high, higher lows, right? So that's what an uptrend is, higher highs and higher lows. If we were to break that trend, right, a change in the state of delivery, right, a market structure shift, whatever you want to call it, it would occur at this location here. So this is a bearish change in the state of delivery. If we had a clear and decisive candle closure below this level right here, that would be a bearish change in the state of delivery. That would warrant becoming bearish at the location on the daily time frame where you want to be bearish, above an old swing high. Here's the important part of the conversation that you need to understand. We have the logic of the daily chart, understanding where we look for certain biases. Then we're using confirmations to confirm those ideas. You're looking at the confirmation right now, right? A confirmation to become bearish would come in the form of a bearish change in the state of delivery on your market structure time frame. On top of that, you'd probably get some crack in correlation at the highs. So what I'm stating here is the trend is your friend until the end of the trend. And to identify that the trend is ending, you would get a change in the state of delivery with a crack in correlation. So here's how we're moving forward currently. I'm going to remain with the trend. The trend is my friend until the end of the trend. And the way that I will know that the trend is done, it's changing, is if we get a clear and decisive change in the state of delivery with bearish SMT. Okay, so now that you understand my logic, we can clearly see that price has not created a change in the state of delivery. That will explain why I was looking for longs, why I'm currently in a long position. Next step is executing that idea. Okay, so let's hop down to the lower time frames to understand why we're executing that idea. Okay, so take a look at this, right? Notice how NQ keeps creating higher lows. Okay, notice how ES took out those lows. Go ahead, chat, throw it in chat. What is that? What are we dealing with here? ES took out the lows. NQ did not. What is that? A crack in correlation. Right? So very good job for the individuals that's saying SMT, right? A crack in correlation. ES took out the lows. NQ did not. Now, when using a crack in correlation, you want to be longing the stronger pair. Hence why my long is on NQ. NQ is the stronger pair currently. Right? I'm sticking with the higher time frame trend. There was a confirmation that occurred with the bullish SMT. And now, if you go down to the lower time frame, you'll see our entry function. Right, so during New York Open, right, because I execute